About 2 weeks, I joined the group and I saw a lot of very valuable content, and that makes me um, a little bit obligated to give also some value back into the group. And that's the reason why I make this very quick and very short video. Um, it fits to the time that we just closed Q1. And a good opportunity to take a look back how the predictive trading strategy works and give you a quick overview what is it about. So let's take a look on that. That's the Q1 performance of the SPY, which is the equivalent to the S&P 500. And overall in that quarter, and performance from 7.26%, even that the market I know is rising 11.1%, I guess. But the difference is it's then not, let's say, a coin which goes up into the air and landed then on one or the other side. It's a repeatable process. And that's what I want to contribute to the group and share that with you. And maybe you are looking for a strategy how you can gain sustainable income month by month, quarter by quarter. So let's take a look. I only concentrate on two things. And believe me, there's a lot of AI technology in the back, but I want to make it as easy as possible for myself and friends who joined and follow the path as well. I'm just concentrating on the so-called capital flow. The capital flow traces where the big money is going. It's institutional buying and selling. That is the main trigger. And secondly, then the line which is represented and named predictive. This is the blue line you can see. It fluctuates from -2 up to +2. And depending on the scenario, how the capital flow and predictive works together, I make a decision of going long or short. And that's, by the way, important. The strategy applies or can be applied by longs as well as shorts. It's depending on the scenario. Overall, you see this is the performance and 12 trades in total, 10 positive, 2 negative. It ends up 7.26%. I think for a quarterly result, it's quite reasonable. So, and how is the scenario then, how it works in detail? That's it. This is a quick overview. And each day, because it is based on closing prices, each day I take a look on what is capital flow saying and what is the prediction saying. And the conclusion out of that is how I position a potential trade. By the way, sometimes it is neutral as well. Then I'm stepping to the sideline, doing nothing. There was a great mentor of mine who once told me, it's the trade you don't do that matter. I think that's true. And I paid a lot of, let's say, money into the bank because I went in the past against that. So just as one example, if the capital flow is positive and the prediction is positive, I will make a trade on the long side. As well, is it positive and prediction just neutral? The overall driver still is positive. I also trade on the long side. Is it like a wave, a positive wave, a negative wave? I'm going to the sideline. The same for the negative. So this is just a quick sum up to show you and contribute to the community what a strategy which works on the up as well as on the downside can work. I wish all of you a happy Easter. Here in Portugal, we say Boa Páscoa, and all the best to you. Frohe Ostern.